All right, let's get right into it. We are talking about grocery outlets. You probably know them, the discount grocer famous for its amazing deals. But lately, the only thing getting a steep discount has been its stock price. And folks, it was one of the most sudden and frankly brutal collapses we've seen in retail for a long time.
I mean, just look at this number. In 1 week, 1 week, the company's stock just got wiped out, losing a third of its entire value. Imagine being an investor, thinking you owned a solid bargain stock, and then suddenly you're just in a total freefall.
So this really is the million-dollar question we're going to unpack here. How on earth does this happen? How does a company that seems perfectly built for today's economy, where everyone's looking for value, suddenly just crash and burn so spectacularly? Let's dig in. Okay, so the whole thing kicked off, as it so often does, with an earnings report. The numbers dropped, and the market's reaction wasn't just negative, it was absolutely ruthless. Now, what's so interesting here is that if you just glance at the top line, the revenue, it looks fine, right? It even grew a little bit. But Wall Street doesn't just glance. For investors, the two numbers that really matter were a huge disappointment. First up, let's talk about earnings per share, or EPS. Wall Street was banking on 21 cents. The company delivered 19 cents. Now, you might be thinking, it's just 2 cents, what's the big deal? Well, in this world, missing your earnings target, even by a little, is a massive red flag. It screams that the company just isn't as profitable as everyone thought. But honestly, this next number, this was the real shocker. Comparable store sales actually fell by almost a full percent. This is a huge deal. It means that the company's existing stores, the heart of the business, were selling less stuff than they did last year. The business wasn't just growing slower, its foundation was actually shrinking. And just so we're all crystal clear here, this comparable store sales metric, it's like taking a retailer's pulse. It ignores the buzz from opening new stores and asks a really simple question. Is your core business healthy? And for Grocery Outlet, the answer came back as a loud, clear no. But wait, the bad news was far from over. Beyond just missing a few targets, the company dropped an absolute bombshell on investors, a quarterly operating loss of around $228 million. This wasn't just a miss, this was a massive financial crater. So, you're probably asking, where did a loss that big even come from? Well, it was a pileup of major accounting charges. You see things like goodwill impairment and asset write-downs, which, in plain English, is basically the company admitting, hey, some of the stuff we bought in the past isn't worth what we paid for it. On top of that, they were spending a ton of money to shut down their worst-performing stores. Now, these ugly numbers, they were the immediate trigger for the stock crash, but they were really just symptoms of a much deeper problem. This is where we start to see the actual cracks forming in Grocery Outlet's whole identity. See, Grocery Outlet's entire brand is built around this treasure hunt idea. You walk in, you have no idea what you're going to find, but you know it's going to be a great deal. They do this by cleverly buying up surplus and overstock items from big brands. It's a fantastic business model, when it's working. The problem is, lately, it hasn't been working so well. It was really a perfect storm of issues hitting all at once. The company flat out said it was having trouble finding enough of those great opportunistic products. And without the treasures, customers started buying less each trip. Throw in delays in government SNAP payments and tougher competition from other discount stores, and the whole model just started to shake. So, what do you get when you mix terrible numbers with a business model that's starting to crack? You get a third, very dangerous ingredient, a complete and total loss of faith from Wall Street. And here it is. This is what truly pushed the stock off a cliff. It was the company's forecast, its guidance, for the rest of the year. Just look at the chasm between what the company projected and what analysts expected. Revenue was way short, earnings per share were almost cut in half, and they were guiding for even more negative comparable sales. It was a jaw-dropping forecast. You see, this wasn't just a bad quarter anymore. This was management telling the entire market, hey everyone, things are bad. And guess what? They're going to stay bad for a while. That warning shot is what triggered the massive domino effect. And the reaction from the experts was swift. Analysts everywhere were scrambling. Take Wells Fargo. They took their price target for the stock and just slashed it, all the way down to $7. I mean, that is a massive vote of no confidence. So the fallout was fast and furious. You had a tidal wave of downgrades from other analysts, which led to a panicked sell-off as investors just sprinted for the exits.
And then, as if things weren't bad enough, law firms started circling, launching investigations into whether the company had misled its shareholders. A total mess. So where does that leave Grocery Outlet now? The company is in crisis mode, and management has a plan. But let me tell you, its future is anything but guaranteed.
Their big solution is something they're calling a business optimization plan. The core of it is closing 36 stores that are just draining money. But here's the really interesting twist. At the exact same time, they're still planning to open about 30 brand new stores in areas they think will be winners. It's this two-pronged strategy: cut the dead weight and double down on growth.
In the immediate future, though, they are facing a mountain of challenges. They have to pull off this tricky restructuring perfectly. They absolutely have to stop the bleeding in their existing stores. And maybe hardest of all, they have to somehow win back the trust of a market that feels completely burned. Now, if, and that is a very, very big if, they can get through all of that, there is a potential path back. If the new stores are a hit, if they can fix their supplier deals, and critically, if they can rebuild that magical treasure hunt pipeline, then maybe, just maybe, they can recover. For right now, though, Wall Street has basically put Grocery Outlet in the penalty box. The consensus view is that this is a wait-and-see story. Nobody is jumping in until they see actual, concrete proof that this turnaround plan is more than just talk. And that really leaves us with the ultimate question. This company was built on the thrill of the hunt for a bargain. Now, it's in a hunt for its own survival. Can this new plan actually refill its treasure chest? Or is the bargain hunt at Grocery Outlet over for good?